Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's October 3rd. This will be our chart lesson for the day. And you can see on our daily chart here that we had this huge rally today. We were extremely oversold. We did get back inside the brown channel, but prices are still way oversold. So we may get a rally here, even if it's only momentary rally. Uh, but we could also go lower. So we'll just have to see. We've definitely had a break and two legs to a new low. We've had much more than a measured move, which tends to say, hey, the market's really weak right now. And this is on a daily chart. So when the daily chart's telling you that things are really weak, then yeah, things are really weak. So I don't trust this market. I mean, there was really no reason for this rally at all. I think it was just the selling had just subsided momentarily and now it's back. Obviously, if you back out, you can see the bigger picture. And if this blue channel's indeed valid, then that's probably why we rallied. These prices were just following their general price movements based on the rules and the way we teach you to read the chart. So um, we're way overdue for a bounce. But just like when we were going up here, we were way overdue for things to turn down for almost 2 or 3 weeks there. And so we could continue to go lower. I mean, markets can stay oversold much longer than you would expect and stay overbought much longer than you expect. So don't do anything dumb. Just follow the price action. But you can see a very bullish reversal type day. But we had that here too, and it didn't hold long at all. We ended up making a new low on this same day, even though they got a rally here. Same thing. We made a new low, rallied, and it turned down again. We've made a new low, rallied. It could turn right back down again. We're already trading much lower than the high we made today. So, of course, this is after hours, so you can't pay much attention to it, but anything can still happen. So just keep that in mind. The main thing is this dark blue channel. We've had the break and an easy new low, but that's just a short-term channel within the bigger two-tiered blue channel. And this contract has almost been trading down since day one, definitely early in the contract. So we're in a bear market here. Doesn't mean we can't have a huge rally. So just keep that in mind. But we're in a bear market. So and if you look at the economics that are leading this market, there's nothing good going on. I mean nothing. I mean, the president can stand up there all day long and say it's the best economy in forever and the biggest job gains, and it doesn't mean anything uh, when everything else is in the can. So don't let that talk make you believe that hey we're ready for a big rally here because we're not. And the chart's not saying we're going to get a big rally, even though it may be time for a bounce and a short-term rally here. There's nothing that says that the market's finding a bottom yet. This is not rejection. Usually when you find the bottom, you get rejection. And there's no, you can see prices are just hanging around down here. Rejection looks like this where prices rocket on out of there. We had a little rejection right there, but that's not even real strong. Here's look how we came down, made that low, and then just shot out of there. That's rejection. And we'd been very oversold there. And that's what you want to see, and I don't see anything like that over here yet. So keep that in mind. But let's flip over to our 2000 tick chart, take a look at today's trades, and there's not a lot of them. As bullish as this day is, it was not a very easy trading day. We're in a lot of setups. But let's flip over there and take. Okay, here's a look at it. We had this blue two-tiered channel. We had the break right here, made a new low, and then we had two legs up to a new high, and the market corrected. Normally, you won't see me make these additional trends on the retest of the high, but in this case, they were long-term kind of trends. So in order to know when it was going to play out, you pretty much had to do so. So I mean, there's nothing that says you can't draw these, but a lot of times they don't play out. So um, in this case, both of them played out, and then prices trended lower from there, and we've still continued to trend lower. So that's the difference today, and we really from about 9:30 to I mean we spent a good bit of this bullish day going sideways. So there's just not a lot of trades here, and so it won't take me long to go through these trades this morning at all, or this afternoon, from this morning or from today. But anyway, let's zoom in here, go through the trades, and again, there's not many of them, so it's not going to take us long at all today. I will say too, let's back out here one more time. You can see there's not as much, I mean, for such a strong rally, there's not a lot of volume there. Look how few bars there are today. It's not a lot of them for that kind of a rally. I mean, look at this day. Look at the number of bars, how wide that day was. You got to scroll across the screen to see it. Here you can get it all in there, and there's still room left on each side. So volume is down considerably. So that tells me we're rallying on low volume. That's not what a real rallies consist of. Doesn't mean that we're not building momentum and trying to build a bottom in here, but usually you're going to, capitulations where you find bottoms or tops, the volume is extremely high usually, and we're not seeing that here. So more reason to be concerned that this is a false rally. It's just a bounce in an oversold market where we've run out of, people are scared to sell at that price. We've dropped so far, and so the market kind of rallies. But anyway, 7 o'clock came just as we're making this high up through here. Let me zoom in a little more. And you get a leg back, first entry, then it pulls back again and turns up. That's a second entry long. I marked this green because we are breaking a new high, but this, as long as you got room to these highs, that's probably a relatively safe trade. It just depends. I mean, at that point, that was the only trend we really had too. So anyway, I marked it green. You might take it, you might not. We're just getting too far away from the EMA here, so we need a correction. But you actually get a close outside. And you can see we actually had our clear 2 measured legs up, and it actually pushed up some more and then turns down. By that time you could, you probably would have already had this drawn, although I had to adjust this a little bit. And really, you'd say, okay, we had a break right here. Of course, that hadn't been confirmed, but if you look, it fits the rest of the day up. And every now and then you will see a break of a trend line like this during the overnight session because there's not a lot of volume and they can push it a little easier and make it do things that they can't do during regular trading hours. And so sometimes you'll see a break that doesn't lead to the end of the trend. And I think that's what this probably was today. So before somebody asked me about that, I thought I better explain it. But anyway, you got your break here and multiple legs up, got that last little push up, and then look how bearish that is. Boom. Try to go higher once, twice. And so that's a failed second entry long if it breaks lower right there, and they're probably going to have people trapped. A lot of the longs are going to exit, and look how quick it drops. That's a great setup. And it's also a second entry short, but the signal bars here wouldn't be good enough. You'd have to use this one. I think that's bearish enough with enough room that you probably could still even enter right here. If you're more experienced, you probably are entered on the green bar. If you're not, then you probably won't enter on that bar. And I think you're still safe to enter on that bar. I think there's still enough room to get out, and I think that you're probably going to at least get a measured leg, and we may be turning over at this point. So if you measure that leg, you're looking at something like that right there. But anyway, drops on down. You might have even looked at this as a reversal. I didn't mark it as one because it really moved a long way, but this is a new high here. And you get a first entry, then a second entry. It turns down right off the key entry point, right off the EMA. And notice we came back. If you had this, you had to be, you may not have had this midline in here yet. It's a little more advanced. But if you already had found that, maybe you take that trade. And of course it drops on. Now we're just getting too far away from the EMA, and then it bounces. And if you would have had your trend line the way it was originally drawn, it bounces a little early. But notice you had your break way up here, then 2 measured legs down after that. And it takes off. But I wouldn't buy right here. I'd wait for a higher low or a reversal pattern, and you just don't get it. It just runs up. You get a close outside, new high, and then it's running down again. And then notice how you get your break. You actually get a little tick lower right there. I traded this again as a failure because there's a first entry and a second entry, but you can't really enter on the second entry. And there's a triple test. We tried to go higher once, twice, 3 times, and it's a first entry, second entry. So it's a failed second entry, a triple test. It looks like 2 legs back up. Nice bearish bar. I like going short there. It's too bad we didn't get a good signal bar here on this second entry, and it just there's actually a news item. It's a 9 o'clock manufacturing PMI, so that one can cause a little noise, and you see it did here. So you probably want to be flat there, but it runs up, and it's pretty quickly. It's you're just kind of chopping sideways. But notice we tried to go lower once, twice, and then it tried to go lower again 3 times, and that's also a second entry long. I like going long there. We're really in a little range. You could have looked at it like this just as well. That's just the way I chose to draw it. And you're just trading the range, the low end, the triple test, and you're going to ride it back up. So however you saw that, same thing. We run up here and you get another first entry, second entry, but we're a little ways away from the EMA, and if you draw a little correction channel there, there's no break of it. So I'm a little leery going long there in any of this. Then we come back, you get a first entry and another second entry, but look at, you got 3 bars stacked side by side, and one of them has no body. This has stems on both sides. It worked, but that's a dangerous second entry, and then you can see we're just chopping sideways here. This one was tempting, but it closed outside the low of the range there, so I didn't even like taking it. And again, there we go, and there's just no good setup on it. You can clearly see the green channel, but I just don't see anything there that I would risk going long on. And somebody actually sent me this one and asked me why it failed. If you look here, you had this spike up in a channel, and then you had a break, move to a new high, and you can see the midline here, which you should have had the midline clearly by now. And you can see we tried to get above it here, came back below, worked higher, and this is almost a repeat pattern. And again, we fell back below the EMA or the midline here, so we're stuck between the EMA and the midline. Yeah, it could shoot on up. It does look a lot like a second entry, but to me this is a double top, and that's a leg down, and that's a first entry, and then the second entry came a couple of bars later, and then it's too congested to be at such an odd spot. I mean, you want to see prices coming off this trend line. I mean, we kind of had something similar here, but notice how we just came off the trend line, and we're not back to the midline yet. And we could be going all the way back up here at that point, but now we've tried a couple of times, and you got to be very wary of this right here. So you want a almost perfect setup, and I can see how somebody could get tripped up there. It's 2 legs back. It's the first break of this green channel. But to me, this green channel is the retest, or is the new high after this spike in channel here. Notice that's the first move up, and so you would expect a pretty good correction here. And it's really mostly sideways. You still can get a down channel with a break and a couple of legs down, and then you find some support, and off it goes again. But we're overdue to come back to here, so that's where you need to be thinking your target would be. And then by the time that happens, it's pretty obvious we're in a range here. I don't see anything. There's a failed breakout here. Of course, this channel's still in play. I'd wait on a lower high, which comes here, and it's an inside bar or kind of a doji bar side by side. And so I don't think you want to go short there. And you can just see we're kind of chopping around, but no, then we make a triple bottom. The only reason I didn't like going long there is it's right into that resistance. But when we push through and pull back and test it and get a second entry long there, I like going long because this does make a new high. And so I like going long right there because we just came off the trend line again, and now we tested the upper side. Of course, it doesn't go very far, and then it's rocketing lower. Now, there is a triple test right here, and there's a good chance that we come back and test this breakout area again. So it's another one you might take, but I just think it's dangerous going short in a strong trend when we just came off the main key entry point. And turns out if you took it, it's a great trade. But that's the only option you get to enter it until we bounce down here. And at this point, this is a new low, so you don't really know if this is, if you think it looks like earlier the range is further up here. I would have been playing it probably right here, and that looks like a failed break. But now you got a first entry, second entry. But look how much further we went. So I like that one. Oops. And in the end, I think the lows are way down here. And you should have, you probably would have moved them down here a little lower, and then gives you this second entry. Notice we bounce there. I don't see any reason to go long there. And turning back. There's a lower high here off that high again, but it's right into the EMA, which doesn't really matter on a range. But again, it looks a little congested too, which so that makes it a little more iffy. And then of course we bounce here, and you could say, hey, maybe there's a failure here, but it's on the wrong side of the EMA. It turns out to be a great move, and we're where we headed right back down to test those lows. And I want to show you this. Notice if I can get this thing to cooperate here, we'll move it. What the heck? Notice that gap right there. And people will look at me and say, what gap? What? No, but notice the bar closes on its high. This one closes on its low. There's no, look how all these bars overlap each other. So, and there's no overlap there. That's a gap. When you draw your trend lines like so, and you see a gap on one, you know your trend line's correct. So that's like a verification that your trend line is correct. You'll see that a lot. And so there's a good chance we're getting a retest of the low. So if you got a good setup here, maybe you go short, but we don't get it. We bounce down here, no setup really. Nothing going on here. We come back. And now you got, notice you made your low, you test it once, you test it twice, and there's plenty of room back to the EMA. And that's a nice kind of a bounce off there, like you're going to get some rejection. So I like that one. You actually get a higher low, but by that time it looks too congested, especially when it doesn't break higher. If it would have broke on higher, maybe you go long there. But when it doesn't break higher there, that's congestion. I'm not taking it right there. You know it's probably because of the support, but it could turn down off that EMA and break out here and fail and then go higher. It could just work a lot of different ways out of there, so you got to be careful. But I like that one. Runs up here. You can't go short out of that. It ends up breaking higher. And we're working higher here, but again, I don't see much that you can, there's just not an entry here. There's a second entry here, but that's an inside bar, not even a very good one. Finally get a break, and you come back here, and you got a hidden second entry here because it doesn't break higher, but notice you go down, first move up, down. So if you went to a little smaller chart, there's a second entry right there. It's below the EMA though, but if you notice you get the triple test, then maybe you take that. But I just don't think it's a good, it looks like we're about to set up another range is what it looks like. And if so, you still are safe back up to these highs, but this thing just keeps going. You get another little spike in channel here. And this, even though it doesn't look it, this is one of those trends you hear me talk about occasionally, where your corrections are very shallow and you get all these little bars that look like dojis and stems, and they just keep going and keep going. That is a very strong move right there. It doesn't look like it, but learn when you see that. Look at the EMA pointing straight up. Everything's above it. Look how shallow all your corrections are. They really don't even back up hardly. They mostly go sideways until you get a break there. And then now you got a clue that it's fixing to end. You get two legs up, and that also happens to end where there's a measured move based on this leg up. So learn what these look like. And if you recognize that's a strong trend, any decent signal bar off the key entry point you usually can take. I mean, even that bar right there, even though it's red, it's 6 ticks. I mean, I don't know that I would risk that one. Maybe you do. There's a good one you could have taken. That one's probably close enough. I don't know about that one. That one looks a little congested. You got a double bar matching high. Maybe you still take it. I don't know if it works or not. Let's just see. But usually you can take any of those. That one's really pushing it. I don't know if you'd have got in that one or not, but it's got a little stem there, and the 2-bar matching high would probably say, oh, let's scratch that one. Again, there's you a good one. Even though it's broken, the first one is probably still good. There's you another good one right there. Even though you've had your break, you do have a new high. So that one's and that one looks a little congested, but you can't worry as much about the congestion because that's just telling you how strong the move is. So be careful with those, but you might practice with them. So anyway, we got the break, new high, now we're correcting, and notice you actually get a triple test, and then you get a high or low here, and there's a second entry right there that fails, and then you get the double bottom with a little high or low. So I like going long right there because it's probably going to run up again. It runs up, finds resistance at the measured move, and turns back down. No reason to enter there, and then we're working back higher. That's pretty much it to 230. So as good as this day was, really we spent a large portion of it, say from 9:15 to noontime. Our best trading hours with nothing, hardly any volume, not really doing much. So that kind of wiped out the day, really. And there just wasn't much in this strong rally. Unless you understand that rally right there, there's just not much going on that you could take. If you understand what's going on, you could have taken some trades right there. So, but anyway, just one of those days. Very low. Again, this is a very low volume rally. Volatility's slowed down quite a bit. Most of the moves are up. There's some corrections here, but most of them are to the ups. Most of your best moves are all up. So it's definitely an upward trend today. So you definitely want to be buying. You got to be careful selling. Anyway, not much else we can say about today. So just not many trades today. But so I'm gonna wrap it up. We'll be back again to do it tomorrow. Hopefully we'll have a little better day tomorrow. We'll see what happens. If we'll get a follow through, or the selling comes pouring back in. And neither one would surprise me tomorrow. Either one's a possibility. So, and let me say this too, real quick. There was a Fed chair speaker today. Don't worry about those, even though they're red. I mean, that came at 2 o'clock. I mean, I've never seen one of these really affect the market. I mean, he starts speaking at 2 o'clock. Yeah. Usually these things are some kind of luncheon or something. I don't know what this one was. 2 o'clock doesn't sound like a luncheon unless it was out west somewhere. Must have been out west if it's some kind of luncheon. And they speak during these luncheons, and they may or may not say anything. And if they do say anything, you don't know what time it's coming. So even if it says 2 o'clock, you can't time that. So I don't pay much attention to those things. So don't worry about the speakers. Now, if it says FOMC rate announcement, by all means, be flat an hour before. Some of this economic stuff lately has been having some fireworks because the economy's so bad and people are hanging on every word, trying to figure out what's coming next. So some of those have some fireworks lately, but especially the ones that are around the inflation numbers and things like that. So pay attention to them. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.